And let's go ahead and do some more work around the 10-point trade system. First, let's go ahead and show you how to open up green charts if you don't remember that. On the PC, go to the Windows icon in the lower left corner, and in the Mac, go to the relevant location there. We call the platform Green Charts, and it may be listed as Green Charts in your list of programs here alphabetically in the G's. Sometimes, and more recently, it's being loaded as Sierra Charts, or the name of the parent company, as you can see here. So click on Sierra Charts. If it's located here, it might be located over here in a more highlighted location, and that's fine. Open up your green charts as you see here, and let's go ahead and open up a file. So go to the menu, click on File, followed by Open Chart Book, and you'll see the window here with the various chart books. Now, often you'll be using this multiple selection button. You'll click that button, and then you can click on and drag through as many of these chart books as you would like to open. Now in this case, I only have one chart book because we're going to create more. So I'm going to go down to where that chart book is. It's right here. And I'm going to open it. Okay. So we'll wait for that to take a look at our rules for the 10-point trade system. And we're going to do that by simply entering www. and click 10-point trading. And scroll down until you see the 10-point trade instructions. And probably one of the most important things about this is a PDF of these instructions, as you can see here. Okay, I'd encourage you to print that out if you can and have that by your side as you're going through the 10-point system. We've gone through the instructions previously, and you're familiar with this page. And so we're going to jump into trading so that we can solidify these instructions more through activity than reviewing them again. Okay? And so we're going to jump over to our green charts, and I've pulled up a document with the rules, so we're going to have those by our side just like you would have your rules by your side that you've printed out. Okay? Alright, so basically what we're looking for here, as you know, we're going to start with the majors and minors. Here's the number one. And the majors and minors, they're going to set the timing and the direction. So this is our trigger indicator. And then we're going to confirm with the TNT indicator that the trade is a viable trade. We're not going to take the trade, so that's the second step. We're not going to take the trade till we go to the third step and somewhat get the authorization of the pressure indicator to take the trade. It's the most predictive of the trade direction, okay? So we'll be reviewing those as we go through. So let's go ahead and find some trades. Now we're trading the Euro US dollar, and with regard to our charts, we have two primary charts, the 30-minute chart and the 60-minute chart, okay? Now, the reason why we're using the 30-minute and the 60-minute is because the 30-minute is still kind of in the emotional realm of the market. For instance, you see that the market is moving upward, but there's been an emotional dip or a sell-off as shown here by the 30-minute, and then it's pulled back up. So we can make some money trading the emotional activity of the market. Yet the 60-minute is more in line with the true direction of the market, represented by the 120 or the 2-hour indicator and the 4-hour indicator. The emotional side of the market is more representative of the 5-minute chart, the 15-minute chart, and the 30-minute chart. So we might be trading a little bit more on the emotional side or a little bit more on the actual trend of the market. But you'll see how these charts interplay as we go on. So let's go ahead and find a trade. First thing we want to do is see if our current data will give us a trade. And as you can see, we are above the overbought, which would be one criteria, but it's not turning down, as you remember. So let's go ahead and move to historical data. Now, we can see here with the green signal that this is live data. So in order to get to historical data, we simply left-click on this darker gray square and slide it into historical data. You can see that we are now in historical data because of the red square. All right? So let's go ahead and see if we can find a trade. Now the first signal that we're going to be looking at is the major and minor, as indicated here, number one, the major and minor. It's going to tell us if we have a trade in the timing and direction. There's three rules we're going to be looking for, and we need all three to be present. If we're going to buy, we need to be in the red oversold region. So we need to be below the oversold line in the oversold region. Now we're above the overbought line in the overbought region, so we're going to be looking for a sell. I'm going to click through the market using this arrow on the 30-minute chart to move forward. Now, as I click it once, you see that I move one candle forward. It's a small candle, but we did move forward. I'm going to click it again, and I'm going to move 30 minutes into the coming data. One more candle. If I were to come over and click on the 5-minute arrow, it would move 5 minutes at a time. So look what we have here. We have a possible sell trade. So let's see if that sell trade is one that we can take. So we come over here to the majors and minors. We have a sell trade, so we're looking for what criteria? Well, let's go up to the 10-point trade criteria. We're looking for a sell, and so for entry, we need -7 points out of -10 total points. Okay, well, we see that we have 3 total points here with the majors and minors. We have a total of 4 points with the TNTs, that would be 7, and 3 possible points with the pressure. That's where we get the 10 points. So let's take a look. We're looking for the sell. Our first minus point right here in the sell is that we need to have the majors and minors in the overbought region. Okay, and so we do see the majors and minors in the overbought. Just for clarity, remember that the red and the green are the majors. Those are the traders and players in the market who are trading more than $1 million or some larger amount, 1 million, 10 million, 100 million, 500 million, okay? They're the institutional investors. They're the ones that are making the market. The minors are the gray and the black, and those are individuals in the market. And those are individuals or smaller organizations in the market under $1 million, okay? Those are individuals like you and I. All right, so we see that it is in the overbought. For a sell, we see that it needs to be turning down, which it is. And we're seeing for a sell to get another minus point of our -7 total, the majors need to be crossing and the minors need to be crossing, which they are. The majors are crossing and the minors are crossing. Okay, great. Now, step number 2 is to come up to the TNT indicator. It's a confirmatory indicator. We need 3 out of 4 of the possible 4 points, 1 point for each line. Okay, so we're selling. So let's take a look. We have the thick orange pointing down. And is that the case? Yes, it is. We need the thin orange for a sell pointing down. It's not. Okay, that's a problem. So we want to be cautious now. For a sell, we want the thin blue pointing up. Now, as you know, that means that the market is going to go down or a sell. Okay, well, the thin blue is pointing down. All right, now we would like to have the thick blue pointing up, which means the market is moving down or it's a sell. And that's exactly what we see. The thick blue is up. Now we only have 2 out of the 4 possible points. This trade is not ready. So let's go ahead and do this. Let's move forward one more 30-minute candle. Now, just to show you how these charts work, I'm going to do that by moving at 5-minute increments. Watch, I'm going to need to click on this 5 or 6 times before the 30-minute candle is going to move over. So 1, 2, 3, 4, 5. So there's 6 5-minute increments in a half hour. I click it next, the 30-minute candle moves over. Okay, so I can kind of set up the 5-minute. I can set the 15-minute up in an optimal position to support the 30-minute if I wish. Okay, I'm not really liking this because look, the gray's not pointed down. So let's move over another 30 minutes. Okay, here we are now. Now you're starting to learn fairly quickly how to identify this trade. So you can see that we have the majors pointing down and the minors, but they're no longer crossed in the immediate vicinity. Yes, they crossed over here, but that's history. So we're going to move forward because that is not a trade that we can trust. Now, it did go down dramatically, but again, we're looking for a trade that we can trust. There's going to be many opportunities in the market that we can trade, and that went down very well, but we're looking for those that we can trust, okay? So now what do we have, okay? Now we have the 30-minute majors and minors down below the oversold. Let's take a look at that. So we're going to start, number 1 step is the majors and minors. We're in the oversold. That means we're going to be doing a buy. So let's check out the next buy signal. It's turning up. Is it? Yes, it is. And the next buy criteria, the majors and minors, is are they crossing? Yes, there's a cross here and a cross here. Okay, that looks good. Now let's go confirm it with the TNT, step 2, the confirmatory indicator. Well, we're buying, so we want the thick orange to be pointed up, which it is strongly. We want the thin orange to be pointed up. It's not necessarily, very slightly, okay? And then we want the thin blue pointing down. It works in the inverse. So as it's down, that means it's going to be going up, the market's going to be going up, or it's a buy. And the thin blue is pointing down, so that means the market is going up. And we want the thick blue down, because that means a buy. Well, the thick blue is up. So we barely have the orange. So we have 3 out of 4, but not in great shape. So then let's come down and see if we have the authority of the pressure indicator to take the trade. There's 3 possible points. We really only need 1. The most important of these points is the direction. Look at this asterisk right here. That is because down here 70% of the value or significance of this indicator and trade direction significance is in the direction. Well, the 30-minute is pointing down pretty strongly, and they're coming together. The 30-minute doesn't look very good on this one. The 60-minute is looking a little bit better, but it's just barely crossed. So let's go ahead, one more 30-minute increment. Now, for instance, there are 2 15-minute increments in each 30 minutes. So let's go ahead and click twice. Well, looks like we were already in one of those increments. So let's now take a look at our position. Okay? And so we see that we're in the overbought, turning up, crossing. That's our first indicator to check. We're buying in the oversold, turning up, each is crossing. Okay, that looks good. Let's see if our TNTs can confirm that. Well, the TNTs, our confirmatory indicator, we need 3 out of 4. We have the thick orange up, thin orange up, thin blue down, thick blue down. So in order to buy, we need the thick orange up, thin blue down, thick blue down. Okay, we achieved 4 out of 4. All right, let's come down here and see if we have the authority. So we have one monitor saying, yes, it's a buy. A second monitor, sentinel, flagman, or indicator saying, yes, let's buy. But now we need to get the authority approval to do so. So we have position number 3, the third point, the pressure. We have 3 possible points. We just need 1. And so with a buy, we need it pointed up. So we have the green pointing upward, the red pointing downward. It's about in the middle. We'll say that's neutral, and so we'll go ahead and do that because we see other indications of a buy. We see the 15-minute coming up and a weak pressure. We see undecided pressure with the 60-minute, and it's moving upward. We see a couple of the indicators moving upward. We're not seeing a lot of cooperation with the 2-hour and the 4-hour, other than the 2-hour is weak here in the pressure. So let's go ahead and take this trade. I'm not real excited about it because the indicator has moved a little bit beyond halfway. So it's a little bit on the risky side. And so let's see how risky that is, just as a learning experience. But I'd really like to see this just barely moving into the channel. And I would like to see the 15-minute back here in the channel. Okay? That would be a better trade. That would be better positioning of the 15-minute. But we wanted to have the pressure on our side. So we went through. It would have gone well for us. But let's go ahead and set it up. So we want to put in a timestamp to make it easy to know which of these indicators or which of these candles we started. And we did that by clicking on the vertical line, and in this case we chose the pinks because it's a high contrast color. So let's go over and let's set our price by clicking on the horizontal ray tool, and we want that high contrast color, so we're going to click on TC2, and I'm going to click out here so that I get the line, and then if I click, I place line. Then without holding any keys down on my mouse, I can move it until I get right where the current price is and set the line with another left click of the mouse. Let's go ahead and set our take profit. So I'm clicking on TC2, so I'm clicking on TC3, and I'm going to click on set the line, and I'm going to set the line at about right here. Let's see what 5 pips would actually be on that line exactly, because look, we're at 7550, so 5 pips up would actually be 7600 if this is the 5 pip location, okay? But I don't want to be on that line or above that line because this trade has already kind of moved more than I want it to. So you notice how these lines mean something. I'm going to spread this out a little bit. So the dark lines are pivot point lines. Those are formed by a statistical analysis of the previous day's trades, for instance. So these darker lines are what we call pivot points, and those are formed by a statistical analysis of the previous day's market movement. Okay, so these are set by what happened yesterday. All right, so you can see, however, that these lines mean something. These lines I'm looking at right now were formed from the previous day's trades. So you see that the market came into the day and it bounced off of this emotional line. This is emotional because it's an even number, and the market's saying, let's don't go above 18,200. And you can see they didn't want to go below 18,100. Eventually they do, but you can see how they bounce on these lines. They bounced across this harder pivot point, broke through, but stopped on this harder pivot point because traders in the market are respecting these lines. Come up to the emotional line, bounced off another emotional line. You can see how they respect these lines. So, since our trade is somewhat already kind of into the trade, I'm going to want to respect this line right here. So I'm going to pull the trade inside of that line just a little bit, okay? I'm going to turn that indicator off. I'm going to pull this in, and now we're going to set our stop or hedge. So we want the horizontal ray, extended ray, and I'm going to click on TC4. That's going to create a red line. Now we're wanting to have the market move up, so the stop or hedge is a protection if the market goes down. So I'm going to set it at what? Well, we can see over here, I'm just going to place this line, we can see over here if we're buying, we want to set our take profit at 5 pips. We want to set our hedge at minus 25 to minus 35. Well, that's kind of a range. Why? Well, because now I'm going to turn this tool off, because if I don't, if I click to get on this tool, I'll set another line. Okay, so I'm going to turn this tool off so I can click it, and then I can grab it and move it. So I'm going 10, 20, 25 is just above this pivot point. Well, I don't want to be above the pivot point. I would like that to be a barrier to stop the market if it comes down here, so it bounces off and comes back up. So I want to be on the inside of a barrier for my profit, and I want to be on the outside of the barrier for my stop or hedge. Well, I'm very close to another barrier, so I'm going to just come over here and go about halfway down. So each of these lighter gray lines is 10 pips. So you can see I'm about 10, 20, 30 pips out. That's right in between my minus 25 and minus 35. Okay? So let's go ahead and take the trade. So we're going to use the 15-minute chart. I'm going to click on this arrow, move it forward just 15 minutes, knowing that we're somewhat already through the trade. You can see this has already passed into the overbought, the 5 minutes in the overbought. So let's see if we can get 5 pips. We might have got it right there. Let's see. Nope, we're just shy. Let's see if we get it the next hour. We didn't. Wow, awesome. Okay, we picked it up 15, 30, 45 minutes into the trade. We've made our 5 pips. That's exactly what we wanted. If we're trading a $15,000 account, we just made $75 in 45 minutes. If we're trading a $50,000 account, we just made $250. Okay? All right. You recall us doing that, and so I'm just reinforcing that. Let's do a couple of others, and we'll kind of speed it up, okay? All right. So let's clean this up for when we come back. I'm going to left click right here on these numbers, and I'm going to slide this so I can reset it. Left click, hold it, and slide it back and forth. And now I want to clean these lines off. So I'm going to come up here to EAL, erase all lines, and I'm going to hit yes. Now I had to have selected that chart to do that. Okay, so let's trade a different currency pair. Well, how do we create different charts? Okay, great. Let's go ahead and save this chart. To create a new chart, we're going to go ahead and save as, and we're going to type in a new currency pair. Now I know from my memory that the next most traded currency pair is GBP USD, and I'm going to erase the other. So we just created a new file. Now you can see it actually is still carrying the data of the previous file. So let's go ahead and change that. I'm going to, in this TNT area, right click, chart setting. I'm going to come down here on this first page, and I'm going to change that to GBP USD, and I'm going to hit OK. And now the data is loading for the British pound US dollar. Okay, and that's how you add another chart. So we're waiting for the data to load, and while we're doing that, let's go over and I'll show you where, and that's how you load up a new currency pair. Okay, now this currency pair, because we saved it as is, it's right now back into historical data. Now let me just show you, where would you find these different currency pairs? Well, we're going to go to, and then basics. And inside the basics, you can see we have Forex currency pairs, and we have the top 10. So we were just doing the Euro USD, and the second most traded is the British Pound USD, and then you can see the third, fourth, fifth, sixth, and so forth to the 10th. Now, I've commonly traded these top 30, or the 30 what we'd call common currency pairs, okay? But you can see here's a list of those currency pairs, and you can build as many of these as you want. Now, depending upon your computer, you may not be able to open more than a few currency pair at one time, and you'll have to test that out. Now, I wanted to come down and now I wanted to talk a little bit about pips. Pips has a name. It's right here. You see pips, and it's price interest points, or some call it percentage in points. Notice that they're just making something up. Okay, we'll just refer to it as pips. It doesn't matter. You can study this a little bit here. A pip is really 1/10,000th of a dollar. Okay, and so often 1 pip is equal to $10 with leverage. All right. For practice, we're going to use a lot size of 0.1. We'll talk more about that in a different video. But you can see, depending upon your account size, depends upon what risk we'll take in the market. And we're a conservative trading group, so we don't risk much, but we make a lot. And you'll see how that happens. But I wanted to come down here to pips and some of their calculations. So the pip is at the 4th decimal position. Let me just move this over a little bit, okay, so we can take a look. And you can see on this chart here, this 5-digit representation, just like what is seen here. These 5 digits, 1, 2, 3, 4, 5, on the right side of the decimal point. So the pip is located in the 4 position as a reminder. We've talked about this. The 5 position is a point. That's a 1/10 of a pip. And 10 pips is aligned with where the 3 position is. So if we wanted to add 10 pips, you can see how we align the 1 with the 3 and the 0 with the 4. And if we add that up, it would be 0.12445. Okay? So you can see here, if I left click and pull this, that each of these lines is 10 pips. For instance, here we go from 1.280. This is 281, 282, 283. Okay? But except for the Japanese yen, it has a little bit different representation. You can see there's only 3 digits on the right side of the decimal point, and the pip is at the center one, or the one represented here by the 7. Okay, if you added 10 pips, you can see you'd line the 1 up with the 6, the 0 with the 7, and you'd result in 0.778. If you subtracted 5 pips, you'd line that up with the 7, for instance, and you just subtract that, so you'd end up with 0.628. Okay, so I just wanted to show you the little bit of math here. Wanted to also show you the currency pairs that are most common. So if you wanted to add some more and kind of test them out, you could do that. All right, let's go ahead and take a couple of other trades. Well, we're here in the British Pound US dollar, so we're going to mix it up a little bit, roll the dice safely. This isn't risky, we're just shaking it up. Okay, so let's take a look at this. We have kind of some odd things happening. Look at these pressures and so forth. So we're going to click through on the 30-minute until we get something we can trust. It didn't go below the oversold. The market's kind of acting a little bit strange right now. Okay, now we're getting a little bit of direction in the market. Okay, great. Okay, so we're wanting to see a little bit more out of this. Want a little bit more unification between these. Are very dispersed. Look at the pressure. We're not going to trade. We're not going to sell against that pressure going up. So we're just going to wait until this is ready for us to trade. Okay, so we're just moving. We're just waiting. And we see this coming down. This is good. Oh, in the overbought, turning down, crossing, but the pressure's just too much. We're not going to do it. Pressure's just very steep all over. This trade's still going to go up. May come down a little, but it's going to go up. So what would you do? So we're waiting all these 30 minutes. This is like 3 hours. Well, that's when you have other currency pairs that you can look at, and each currency pair is going to be at a different place. So while this one's not ready, the next currency pair that you look at is. That's why you might have 10 currency pairs that you're trading at one time. So 2 or 3 of those will be ready to trade for you. Okay. So here was a good move right here. We missed it because we're looking for the short trade. It wasn't looking good for us. So we're just going to continue until we find a trade that we can trust. Okay. And so we're going to let this one go because these are too separated. Watch, these are going to bounce back probably. See that? So the trade ran against us. So we're going to wait for, we're going to make fewer trades, better trades, fewer, better trades, okay? So let's go ahead, left click over here, move it up. See, that looked like a really big move. And so the reason why I've got these bars in here so that you can left click and set this back to reality. I like to have these lines about an inch apart. It kind of keeps me balanced. All right, so let's take a look at this. We're going to trade the 30-minute. It looks like it's a sell. So let's check it. We're going to look at the majors and minors first. A sell. We're looking for -7 points. For a sell, we need -7 out of -10 total points. So for the sell, we're above the overbought blue line. We are. Is it turning down? Yes, it is. Are the majors and minors crossing? Turning down, crossing. You see the greens on top here, greens on bottom here. It's still predominantly above the half in the channel, in the upper portion of the channel. So a little bit further than I like, but it's strong, so let's see what we can do with that. Let's come up here and take a look at, see if the TNTs confirm it. This is our second indicator, confirmatory. We want the thick orange to be down for a sell and the thin orange to be down for a sell, which they are. We have the thick orange down, the thin orange down. And we want for a sell the thin blue up and the thick blue up. Being up, that means down or sell. They are slightly. We have 4 out of 4. Look at the pressure. The pressure is flat. So this is the most predictive of the trade direction. It's the third criteria. It's the most predictive of direction. And so for a sell, we're looking for it to be down. The closer it is together, and the tighter and steeper, the stronger. Okay, well, it's kind of weak. So we look over here, the 15 minutes down, down, the 5 minutes down and down. Come over here, we're just kind of checking the field. We see that the majors are pointing down on the 60. This is kind of moving against us. Okay, so we have to decide, is this a sure enough trade for us? Well, the 60's down and the pressure's wide, so it's weak here, kind of coming down. These have not turned. So we have to decide if this is a trade that's strong enough for us. Just for the education, let's take it, and we'll find out. It'd be nice to have some better conditions. These are very steep. Okay, well, let's go ahead and we'll put in the vertical line. We're going to use a high contrast pink. So you see I clicked over here, and then I just moved it over. Then I clicked. We're going to put in our horizontal line. We're going to use high contrast pink as our entry. I just click, take my finger off the mouse, pull it down, click again, set it. All right? Now I'd like to see that number there. I'm going to turn it off so I can click it and move it. I'm going to move it out here so I can see that number. All right, perfect. So we're going down. So I'm going to get the blue take profit, and I'm going to set that blue right above that line because I'm kind of iffy on this trade. I don't want to take too much. How much am I taking? Well, this is 4.5, and this is 0.5. So I'm actually taking 4 pips. That's okay, 3 to 5 pips. Perfect. I'd rather win my trades and rack up money than lose them. Okay, I'd like to take more than that, but just the way this is set up, I'm gonna keep my take profit on the inside of this barrier. Now let's go ahead and place our stopper hedge. We're going to use red, and we're going to start here. So I just clicked on it so I can move it around. So this is the starting point. This is up about 10, 25. Well, that's on the inside of that emotional barrier. Well, our stop and our hedge are always on the outside. So we're going to go up here. And I'm not going to go just here. I'm going to come up. I like to go about halfway personally. Why? Because see how these things stick up? They got stopped by that barrier, but they tested it. So if I'm up here, it's not going to hit before it comes down. All right, this is our trade visually represented. Let's go ahead and take the trade. I'm going to come down here on this chart. It's a 15-minute chart, and move ahead, clicking once. Okay, click twice. See if we can make it. I'm feeling good about this because the 1 hour has started to come down strongly. The 15-minute is moving up and turning down. This is turning down. So I think this is moving in my direction. The 2 hours coming down. It's looking good. There we go. We won it. Okay. Perfect. Looks like we might have won it twice there. Okay. So we won it right here. It took us about one. Well, let's see. Let's go up here and click on our calculator. Clicking on our calculator, this is where we started. We're going to come down here, and we're going to click there, and we went 4.1 pips in 2.5 hours. Okay, great. So if we had a $15,000 company account and we traded that, we would have earned $60 at full leverage. If that was a $50,000 account, that would have been a $200 win in 2.5 hours. So we're basically making, you're making almost $100 an hour there. How can you beat that? Okay, awesome. So that's our second trade. Now, you don't have to watch this whole video, but I'm just going to do a couple more trades real quick. What I'm trying to do here is just help you out. If you need a little bit more instruction, a little bit more practice, that's what we're about here. So let's keep going. let's go ahead and clear this trade. So we won that one. That's great. And so you can see that you may want to make sure you have a little bit stronger trade. Remember, we felt like that was a little bit on the weaker side. We did act properly. We went on the inside of that barrier. See, look, it did not cross that barrier. And so we acted wisely there. It didn't go against us very far either. It only went against us about 10 pips. That's fine. Look how far up we were. That's fine. We won that trade. Okay, let's clear it out. Let's turn off the last tool. Click over here on the chart. Let's go to erase all lines. Hit yes. Cleaned it up. Okay, let's go to the next currency pair. And I wonder what that is. Well, it's the US Japanese yen. Okay, well, let's go back and find that one. So we're going to go to File, left click, Save As, left click, and we're going to change this to number 3. USD JPY. Get rid of the rest, save it. Then we're going to come up. It still has the wrong data in it. We're going to right click, go to chart setting. We're going to change the symbol to USD JPY. Hit OK. We're going to wait for it to come on board. And you can see how straightforward this is. If you look for fewer, higher quality trades, it will serve you well. Okay? Fewer, higher quality trades. Now look, there's one unique thing about the Japanese currency pairs. Let's go take a look. So if you look at this, if we scroll down here, remember our math? We said that they were differently represented. See that? So if we move this over, you can see it right here. Look how tight those lines are. So we have to fix that. Instead of being 5 decimal points, as over here, it's only 3. So we have to go fix that. So let's do that. That'll make it easier so that those lines are now 10 pips away like we like them. Okay? How do we do that? Well, we're going to right click, go to chart settings, and we're going to change the scale. So if we're at 0.01, that's the 10 pip spot for most of the currencies. Remember, the 10 pip spot for the Japanese yen is right after the decimal point. Remember, it was 678. Okay, so we had to change that. Look what that did. It opened it up. So you see there? 5, 6, 7, 8, 9, 10. So each of these lines, again, is 10 pips. I'm going to open it up, so they're about an inch apart. Kind of keeps me in reference, a relative reference. Let's move the slider to find some different data, different time, different place. Let's just show ourselves that this system works everywhere. Okay, we're going to look for the majors and minors to be above or below the oversold or the overbought. Okay. All right. Well, this is looking good, except a couple of things. These are separated, which means the minors are making a mistake and they're going to come diving down, and the pressure is just too steep. We're not going to do it. All the pressures are kind of down, so we don't want to trade against that. Could have done something there, but we're taking safe trades. Okay. So now we're coming up. Would have done okay on that, but we're taking safe trades. Okay. Let's take a look at this. This is looking pretty good. All right, let's take a look at it. We've got our 30-minute above the overbought region. So that means we're going to be buying. We're starting with our first consideration, the majors and minors. They're the trigger and timing and direction indicator. So we're going to be selling. We're looking for 7 minus 7 negative points. So we're selling. We want to be above the overbought, which we are. We want to see the indicator turning down. We want the majors and minors crossing. Okay, above the overbought, turning, crossing. Okay, crossing over here on these. Great, fine. Let's see if our TNTs can confirm that. This is our number 2 consideration, the TNTs. Okay, they're confirmatory. So for the sell, we want the thick orange pointed down. We want the thin orange pointed down. Let's take a look. Well, the thick orange is down. The thin orange is slightly down. You see it ratcheting down a little bit. It's not impressive, but it's down. And then for the thin blue, we want it pointed up. That means it's going to be moving down in a sell, and we want the thick blue pointing up. We're looking for 3 out of 4 at least. Well, the thin blue is well up. That's good to see. The thick blue is down. Okay, that's in the wrong direction. So we have kind of 3 out of 4. We need the thin orange to be a little bit more in the game with us. Okay? So we can go with 2 out of 4. That's a weaker signal. If I just peek over to the 1 hour, we've got 2 out of 4. That's good to know. I'm peeking over. I got good pressure from the 60-minute. It's starting to turn, not quite. I'm peeking over. I've got good downward here. I've got weak pressure here. It's all good news. I've got downward pressure here, weak pressure here. This is up but weak. The buyers are starting to weaken, and the sellers are strengthening. Okay, so this is kind of in the upward area. Let's take it because it's weaker, and let's talk about that a little bit. Okay, there's a rule in the company that says never trade against the pressure, and that is that the majors and minors are a leading indicator. Okay, the reason why they're above the pressure is because they're faster. So you can see these are coming down and the pressure is still going up, and now it's deciding to turn and come down. Or the majors and minors are turning up and the pressure is still going down, and they're kind of now deciding to go up. So lots of times the pressure, although we're not supposed to trade against it, it's likely going to be against us. So if we're in a buy trade, if the pressure is up with us, that's a strong buy. If the pressure is at this type of an angle, it's a typical buy. Lots of times the pressure, if we're buying, is going to be a little bit down, just like shown here, a little bit down. If I look there, it's kind of like maybe minus 5 degrees. This is trying to go down, and this is up slightly. In this case, this is a sell, and the pressure is slightly up. So it's in this risky sell, slightly up. If we're buying and the pressure is down steeply, we're not going to buy against it. Okay. Likewise, if we're selling and the pressure is strongly up, we're not going to sell against that pressure. So let me show you some examples. 45 degrees is about what we won't go against. So this is minus 65. It's parallel and converging. So it's strongly up, coming together. That means it's strengthening. So it's a strong buy. The trend trade, trading with the trend is good. Counter trend trading is not possible here. Well, this one's only minus 30 degrees. It's widening, diverging, so it's weakening. So it would be a great sell. It'd be a little bit of a risky buy, but it is tradable because it's weakening and diverging. Here, this is 50 degrees, too steep. It is kind of diverging a little bit, but you know what? Let's pass it up and look for a better trade. Here's an interesting one. It's kind of down a little bit. There's some disagreement among those that tend to buy and those that tend to sell. So this is a typical sell, but a very lightly risky buy. If we bought, we could probably pull that up. Okay, let's just look at a couple more here. Here's a couple. Again, slightly down, coming together, but wide. Minus 5 and wide, converging. It's a slightly risky buy, but a typical sell. Okay? You would not sell against this. You would buy or sell against this. This is 5 degrees wide, strongly diverging. So it's a typical buy, and it's just a very slightly risky sell. So you kind of see what's happening here. Okay? So let's go back to our trade, and we look at this and we say, okay, it's slightly up, diverging, it's weak. Let's try to sell against that. I'm peeking over. I got good pressure from the 60-minute. It's starting to turn, not quite. I'm peeking over. I've got good downward here. I've got weak pressure here. It's all good news. I've got downward pressure here, weak pressure here. This is up but weak. The buyers are starting to weaken, and the sellers are strengthening. Okay, so this is kind of in the upward area. Let's take it because it's weaker. So let's set it up. We're going to go to our vertical line. We're going to click on a high contrast line color so we know what our date is, the candle that we took the trade on. We're going to put in our horizontal line with a high contrast pink as our entry. And then this is a sell, so we're coming down. We're going to go with TC3, our blue. And look, we have an emotional barrier here, and we have a hard barrier. So we're going to want to be on the inside of the barriers, somewhere in here, 5 pips down. Okay, I'm going to turn this tool off so I can then click on this again and move it. Now notice this is 879, so 5 pips would be 829. So I've got 818. So I'm going to come up a little bit. 8279, right there, 5 pips. Okay, you'll be a millionaire winning 5 pips at a time. Trust me. Just winning those over and over and over, you'll be amazed at what you'll be able to do with that. Okay. Now we're going to, obviously, trading. There's risk with trading, right? And so we're talking about, our usual 90% win rate, near, at, or above that. And you'll win some, you'll lose some, and that's okay. You need to keep on your edge. And so we're going to go up and set our stop and hedge. So we're up about 10. 20. There's nothing here, so I can go 25. Let's go about right there. That's probably about 23. Let's see what it is. I'm going to come up here to my calculator. I'm going to left click, turn it on. Come down here, left click, pull it up. And that's about 27 pips. Okay, good. That's okay. Love it. Let's get rid of that. Let's take our trade. So we're looking for this to come downward. Following this, we're going to try to overcome that, but we've got the hour pressure in our favor. Let's click on it, see if we can't bring it on down. All right, did we get it? Let's see. You bet we did. Okay, so we want another 5 in 15, 30, 45, an hour. An hour and 15, hour and 30 minutes, another 5 pips. With $15,000 account, another $75. We've done that 3 times now. We have 75 and 75, that's 150 plus 60, $210 with a smaller account, gross profit. With this account, we've done 2 at 250 and 1 at 50 times 4 pips is 200. So we're at 500, we're at $700 if we had a $50,000 account. All right, that's awesome. And it's that straightforward. Okay, so when we talk about making $200 or $300 a day or 500 to 1,000, it's this straightforward, okay? And just remember, you put this trade in. So you weren't sitting at your computer for an hour and a half. You were going on with your day. And somewhere during the day, you heard your phone chime telling you that you want to trade. Now, you don't have to hook it up to your phone. Just trust it. Let it go, okay? Now, I have in my mind I'm going to do 4 of these. So we're going to do that. So let's go ahead and clear this up. I'm turning off the tool. If I don't, look, I'm just going to put something else in. So I'm going to come up here, turn it off, click here, select the chart, go to erase all lines, hit yes, clean that up, and from time to time you want to go over and file, save all. Okay? Let's go to the 4th currency pair. Now I know it as the Aussie US, AUD USD. Let's take a quick trade. Okay? Save. Come up here to any of these places, right click, chart setting. Let's change it to AUD USD. Hit OK. So this chart was based upon the 3 decimal criteria of the Japanese yen. So we need to change it back to the traditional 5 decimal point criteria. So I right click, chart settings. I'm going to come here to scale. You can see that we have 0.1, which is typical of the Japanese yen, the 3 decimal points. So we know that for the traditional currency pair, the 10 decimal point position is at position number 3. So we simply put that back in, hit OK, OK, and you see that we now have our light gray lines at each 10 pips. For instance, 8.4, 8.5, 8.6. Okay, now I'm going to left click, hold and slide to put these lines about 1 inch apart. Okay, so we have Australian US dollar. We've set up our charts properly. Let's go ahead and grab this slider and move it around. Let's do something a little bit closer, and let's find a trade. Now, let me find a perfect trade, okay? And so I can show you why these various charts are here. So I didn't give myself much place here. Let's see if we can find a perfect trade. That would have been nice. Now notice, this is interesting. See how steep these lines are? When you get a very steep kink in the line, let me just show you. If you're here, if you're clicking along at 5 minutes, the market's moving at 5-minute increments, and you see that, you could get in on that, because when you see these sharp pressures, this is going to be coming down pretty strongly. Okay? Okay, so I wanted to show you a kind of an ideal trade scenario, why I included the 5-minute and the 15-minute when trading the 30-minute and the 60-minute. Now, when I'm clicking through at 30-minute intervals, you don't see this as much, but as you're watching the trade, you'll notice that here we have the 30-minute, so we have the majors and minors, we're below the oversold, turning up, crossing, so we've achieve this criteria. Now we're going to go up to the TNTs. We're going to confirm to see if this works. We want the thick orange up and the thin orange up because we're buying. Thick orange is up, thin orange is up, okay? And then we want the thin blue down and the thick blue down. Well, the thick blue is down. The thin blue is not very steep, so it's probably coming down. So we got 3 out of 4, okay? And then the pressure, we see that it's down here, but it's kinking up. So we're really only interested in this from this last candle. What happened right there? Now it's breaking open, and it's not very steeply against us. So we saw how we would trade that kind of a pressure. This is flat. This is going downward, but it's very broad and breaking and not very steep. So this is a tradable counter pressure, tradable counter pressure, tradable counter pressure, tradable counter pressure. The pressure's up. The pressure's slightly up, tradable counter pressure. Okay, so this is probably the most important. So what's ideal about this? Look, the 5-minute is below the oversold and moving up. Now it's always going to be a little bit ahead. The 15-minute below and moving up. The 30-minute below and moving up. The 60-minute below and moving up. I would love to have the 120 below and moving up. The minors are moving up, but I've got the pressure moving up, and I've got this turning back up. The reason why I included the 5-minute and the 15-minute is because if you have a pressure down here moving up and you're buying, but the 5-minute is in the overbought and moving down, it's going to push the price downward possibly. And so it's best if you can get everything moving in the same direction around the candle indicators that you're trading. So let's go ahead and place this trade, and then I'll show you a contrary version of this. So we go ahead, we're going to click on this. We're going to do the vertical line, high contrast purple or pink. We're going to do the horizontal line. We're going to pick TC2 for the purple. This is our entry position. We're going upward. So let's put in our take profit. We see that we have an emotional line here. We have a hard barrier there. We're definitely going to go under the hard barrier. Now, this is yesterday, so today's going to be a little bit different. This is actually Monday. You can see because only part of Sunday is recorded. Okay, so how far are we? Well, we're at 672, and this is 718. So that's about 4.6. It's close to 5. We might actually be able to do that. That would be 2.2 if we did 5. Let's see what 2.2 does. Now, no, we're going to leave it there. You don't want to be right at that line because often they stop before the line. Okay, so we're going to leave it there. Then we're going to put in the horizontal line for our stop or hedge. I click anywhere, and then I just drag it down. My finger's not on the mouse. This is where we started. So we're going to go down 10, 20. Hey, 25 is not bad. We could go 35, but you know what? If you can be a little bit closer in, be a little bit closer in. So we have 1, 2, 3, 4 barriers, 2 of which are hard barriers. Actually, we're over here. There are no hard barriers. It's just a soft barrier, a soft barrier. Tell you what, I am going to move it down. I was kind of looking over at yesterday. So I'm going to come down and pick up a third soft barrier. Got it? Okay, so let's see what happens with all this great momentum on our side. Okay, great, perfect. So we got the trade we wanted, and we got it in 15, 30, 45, an hour. Almost got it at 45. See how that stopped right below that? Punched through a little bit. We could have got more, but we're wanting to take what we can. Okay, perfect. So there's another near 5 pips. So let's say, you know, that's 200 and I don't know, 220. Let's call it dollars. So that's how this goes. All right. So you can see that it's good to have as many of these indicators moving in your direction as you can. Now let me show you. So here we're set up right here, coming down. Let's just do this again. So we're coming down, and this 15 minutes is coming up. Okay, let's take a look at that. So I'm going to click here, erase all lines. Let's clean it up. Let's say I take a trade here. I've got this overbought coming down. The thick orange is down, thin orange is down, thin blue's up, thick blue's up, 4 out of 4, 3 out of 4. This isn't good because it's separating. These are going to dive back up. But look, I want to point out that the 15-minute, they're coming up when I'm wanting to come down. Okay, and this is up. I'd really like these to be up, moving down. Now the 5-minute might turn and help me out. So you just have to, I'm just showing you this. I know this is one more, and I'm just clicking in there. As you can see, I'm just kind of doing this rapidly now. You're probably following me. So we're about right here. Let's say that we're coming down. We want to do 5 pips, and we're going to struggle on this one. Okay? Because we have the 15 working against us. So we're going to go up 10, 20, 5. Let's take the trade. We're trying to come down. It's probably going to go up against us a little bit. Okay, 15 minutes pushing up. Push the 30 up. 5 minutes coming down. It's going to try to work it. Bring it on down. Okay, so you can see if we would have waited till the 15-minute would have come up here and this rolled over, then the 60 was ready. Now the 5 is coming down. Okay. We still have strong pressure here. We had a little bit better pressure, but you can see, I'm just trying to point out that you want to kind of keep track of some of the other indicators around you because they will push this against you just like this. Would have been better if we would have waited until now and maybe taken the 60. Okay, we could have waited. Remember, you can wait for a better trade. Now look, this is coming down, coming down, coming down. These are steep. This isn't so steep. That isn't so steep. Okay, so we're waiting for a better trade. We're waiting for better positioning of everything. So now we could click over here on the 5-minute and see if we could get the 5-minute up a little bit. Okay, down. This is up, coming down. Okay, and so forth. So you can see that you can look around and see if you can't get some help from some of the other indicators to help you move through these trades. So just kind of keep that in mind. Now before we go, I just wanted to mention one last thing, and that is, how do you get these colors on these lines? Okay, so for instance, let's go ahead and check on this line here. I'm going to turn the line off, and I'm going to right click, go to properties, and I get this green. And I'm going to click on green because I didn't do green. I'm going to kind of make this a little bit more of a green with a little bit of brightness. So I click here, I've got my green. I can change the line width. Here I did 1. I like 2. 3 is a little bit thick, so I bring it down to 2. I like the text present, so you can see the text, the date. So then you come over to labels, and you choose what you want. Well, I want the date. In order for that label, that date will show, I can also have the label show, what I title it. What I mean by that is I can have it say like green if I wanted. If I click there, so you copy the configuration name. So I did the date. You'd come over here. Now if you want it on the left side of the line, which you do, because if this is over here, I'm going to click, if this is over here, you don't want the letters on the right side, you want them on the left. So you click left, right? And then you click save. Come down here, you type green, and then you have to assign the button. It's green, yes. Now you can see it changed to a darker green. Then you hit OK. So you just do that with all of them. You just come back, turn it to black. Okay. Then you can come over here and save it as black and so forth. Don't hit OK until you're done. So you're done. And the same thing with these horizontal lines. Right click, properties. You just change the color you want. Let's say we want purple or pink. Hit OK. Number 2 width in the line. From the label, there's price. Opaque would cover these candles up. I don't want to cover the candles up with a white background. Save. You would click, type in pink. You'd click 2. And that would assign the configuration. When you're done, click OK. And then last one we did was this calculator, so we'd know how far the lines were. So you do that, clicking chart properties. I click black. It was green initially, so I hit black. I changed the line width to 2, and I have certain ones I wanted the price difference, which is right there. Told me it's 25.7 pips, 257 points. I wanted the time difference. This said 0 because it's a straight line. Look, if I come over here, if it will let me do it, won't let me, and I move it over, it'll give me the time difference. I want it on the left side. Hit save, click black to save it to the number, hit OK. Now if I come over here, because I turn the tool off so I don't put another one, I could say that this went, for instance, if I come over here, from where I started, it went 6.4 pips against me in 3 hours and 15 minutes. Okay? 5.6 pips against the trade in 3 hours and 15 minutes. Now, we wouldn't have taken this trade. This was just a demonstration. All right, that's what I have for you. Listen to this a couple of 3 times. Get good at this. This is what's going to allow you to win in the market using this fantastic system. You can see that it's taking day trading from a guess to more of a decision. And that's what makes this phenomenal.